Hi guys, it's Kia once again from Cara Bookkeeping Specialist. I hope you're all having an amazing day. Today we're continuing on with our credit control series, and I'm just going to talk to you briefly today about one reason why credit control is so important in your business. So regardless if you've been offering credit terms for a long time, or if you've only just started offering credit terms to your customers, one of the reasons why having credit control processes in place is because it can help you save on those pesky tax bills, right? So if you think about it, when you're if you're offering clients payment terms on credit, what you're doing is you've already sold. Regardless of whether they pay you or not, you've already made that sale according to your accounting records, which means if you're selling 100 grand's worth of goods or services on credit, in terms of your corporation tax, you've already calculated that revenue, including that revenue in your corporation tax, and then you have to pay the 90% corporation tax on what you've sold, even if you haven't had the money yet. Okay. The same thing applies to VAT. If you are VAT registered, if you're selling vatable goods, regardless of whether they're standard rated or reduced rate, if you've sold them on credit terms, that's technically still a sale, which means you technically still have to pay over the VAT amount that's due to HMRC at the end of the quarter. Now, if you're making those sales on credit terms, but you've not been paid by your client and they don't pay you in the window that you've given them to pay you, you're now majorly out of pocket, right? So in terms of reducing that tax bill, this is where credit control can help you, because if that does happen, if your client or your customer doesn't pay you on time, pays you significantly late, or doesn't pay you at all for what you've sold them, you need the credit control processes in place to reduce those bills, to reverse that payment, to make sure that you're able to say to yourself, okay, within this time frame window, this is the point at which the company needs to decide we're going to write this debt off, we're going to take further action, whatever the case may be, to recover the funds, not just from the client, but also from within the company and from the tax man. So that helps your cash flow. It's a timeline issue that really helps your cash flow. So that's one thing to think about, guys. Make sure you join me on the next video. I'll talk a bit more reasons why credit control is so important for your business. So thank you so much, guys. See you next time. Bye.